Everyone, thank you so much for joining. Today we have Jason Less, CEO of Riot, Jaime Leverton, CEO of Hut 8, and Ben Gagnon, the best title in the world, Chief Mining Officer at Bitcoin. So this is obviously week 10 of the 12-week series. We've covered a lot of different topics so far. We had people talk a little bit about operations a few weeks ago. So we had Harry and Taras give us some interesting background on that. I feel like whenever I think of public mining companies, I put them into a different bucket than like traditional just operations. And you need the operations part, but public mining companies have like, there's like a higher bar that you have to almost like live up to because everything is public, right, that you're doing. And that, adds a lot more complexity. So I wanted to dig into some of that and all of that today with all of you. But first, the first question I have for you, and we can go through who wants to start, but could you introduce yourself and give a quick background on how you got into mining? Jason, do you want to start?
Sure. My name is Jason Less, CEO of Riot Blockchain. I've held the position for about 6 months. Prior to that, I served on the board of directors for Riot and then on the advisory board when I first joined the company. I got into mining just originally GPU mining because it was just the easiest thing I could do, right? We all have a computer at home, most likely with the GPU. And it was just intriguing to me at the time that I could monetize that computer in some way. And to be honest, it just sounded so cool and so fun to be doing mining in some way. I wasn't too concerned about making money. I just wanted to plug in as many GPUs and computers that I could get my hands on as possible and see if I can make it all work. Luckily, at that time, I had the tailwinds of a bull market, so ended up working out okay. But that going through that experience, trying and failing, got me involved with Riot and got me more involved in the ASIC side of mining. And I've been growing with the company for the past 4 years.
That's awesome. Jaime, do you want to go next?
Sure, but can I ask a question? Because I actually don't know the answer. Jason, what were you doing before to make a living?
So before Riot, I guess my career path is a little interesting. I played poker professionally for about 10, 14 years. And it was through doing that I discovered Bitcoin. It's a very powerful tool in the internet poker community just to move money around. It's just, in fact, plain and simple, easier to do. And I became so enamored with Bitcoin through doing that I just was like, you know what, I'm going to quit poker. I just want to learn about Bitcoin full time. And luckily, by doing that, some opportunity came up. I had no job in mind. I was just like, I'm going to be a Bitcoin guy now, and ended up in Riot.
And now you are the CEO of the company that mined the most Bitcoin last month.
Yeah.
Yeah, that's amazing.
There you go. Everyone just play poker for 10 years and it might happen for you.
Yeah, I'm so glad I asked that question. Sorry, what's my question, Amanda?
How did you get into mining?
Right. So I got into mining circuitously. I've spent the last 20 plus years in the traditional technology industry in Canada, most recently running traditional data center companies, cloud hosting managed services. And I was approached, I should say, I went down the rabbit hole back in 2017 when the last bull market was happening, and I started to get all these inquiries in the traditional data center space for Bitcoin miners looking for power and wanting to come into our data centers. And so that's when I started to explore the space and got really into blockchain and the whole notion of what it could represent as far as reimagining the global financial ecosystem, and it just became a passion of mine. And then in August of last year, I was approached with the opportunity to take over the helm here at Hut 8, and I did. I started December 1st. But really, it's because of my traditional data center background and technology background that kind of led me to this opportunity here at Hut.
That's awesome. Yeah. And Ben, I think I've met Jaime and Jason obviously a few times before, but I think that the story of how I met you was like probably the coolest and the most painful with my neck. So I met Ben. We were on a bus in China. We were going to see a mining site, and Ben was sitting behind me, and we just started talking, and it was a very long bus ride. And so for 2 hours, I was like, my neck this way, and I had to like eventually turn. But it was just such a great conversation that I didn't even care. So we really should have switched seats with people, but whatever.
Yeah, I mean, I was comfortable up here, you know,
Yeah,
that was okay.
So Ben, can you tell us how you got into mining?
Yeah, sure. I found out about Bitcoin when I was studying economics in college back in 2010. And so I missed out on a great opportunity to buy sub $1. And instead, like a stupid college kid, went and bought beer instead. So as the price went up to $1,200 and my friend and I were kicking ourselves, you know, we knew that we needed to get on this at some other time. When it pulled back down to about 200, 300 bucks, I tried buying some miners from Butterfly Labs. They were selling ASICs back in 2013. So I sent them, not well. I sent them about $5,000 and they sent me 0 miners. And then the following year, I went to a Bitcoin ATM. I bought my first Bitcoins. And I was doing my master's in Hong Kong at the time, and I worked for a small development company. My boss just quit. And he was the owner, founder of the company, and he quit to go work for somebody else. That made me question who does that. He had a good business in Hong Kong, and he went to lead for the first Ethereum ICO, Digix. And he was their lead web developer for that. So when I looked at Ethereum, I said, this is Bitcoin 2.0 all over again. I'm not going to miss the boat a second time around and buy beer instead. I took every dollar I had and I went and bought GPUs, and I set up my first Ether mining farm. I flipped that and started selling that hash rate off to investors in Hong Kong, and I used that to scale into more and more hardware. And within about 6 months, I was building and operating my first crypto mine in mainland China. And it's kind of been off to the races ever since.
That's awesome. So in a recent article, Wolfie from the Block quoted that 5 North American mining firms mined 60% of the Bitcoin produced in July. And each one of your companies is on that list. So let's talk a little bit about the question that everyone is getting right now, Chinese migration. What trends are you seeing for that? How has it affected your business, if any? Who wants to be the brave one to go first?
I'll go.
Thanks.
I mean, we've seen a lot of interest from Chinese coming over here. I mean, we get numerous inbounds every single day looking for hosting. It's unclear how many of those are legitimate and how many of those are replicated amongst, you know, different counterparties, because that's just kind of part of the culture there. The demand is really, really high, and the amount of infrastructure that they need to replace all the down miners is enormous. I mean, it does not exist anywhere else in the world. It's gigawatts worth of power. It's millions of rack spaces. And so if you're looking for that kind of power, I think you do have to look towards North America, as the US being the #2 electricity producer and Canada being the #3, were the obvious logical places to go. For us, as a publicly traded company, it's really difficult for us to work with random Chinese groups to do hosting or some sort of strategic partnership. What we were able to do is we take this new market fundamentals and new market economics and secure lower pricing on our existing hardware purchase contracts, which was really powerful for us. And, you know, we're able to achieve the same levels of growth that we were aiming to with significantly lower capital needs. And that's how we took advantage of the situation. It's unclear exactly how all of this is going to play out, because the Chinese market is still so opaque. And we don't know how many of those miners are actually being relocated, how many of those miners are just going into storage and serving as some sort of long-term call option on Bitcoin. But we all know that this is their #1 jurisdiction to come to if they can make it here.
Mm-hmm.
Yeah, I would, I mean, we've had the same experience as Ben and I had a chat about that last week. There's tons of inbounds, but we haven't seen a lot of actual transition to sign contracts. We haven't seen cash moving. We're not aware of anything of scale actually officially putting roots down here, but there's certainly a ton of activity. Obviously, we all benefited from an increase in production as a result of the adjusted hash rate. And And then we also were able to step into a significant order at prices we didn't expect to see for delivery this year, ordering another exahash, well, just over an exahash for delivery in the fourth quarter. So certainly, I think the North Americans more than anyone have benefited from the exodus, and still early days as to how this is all going to play out for sure.
Mm-hmm.
Yeah, as Jamie said, obviously all of us benefit really just by doing nothing. I mean, the first order benefit, quite an incredible business. And I don't mean to relish in the unfortunate fate of others. No, I have a lot of sympathy for the business owners, the miners in China. I can't imagine deploying all that capital and then just having your whole world upended like that. But by virtue of so much hash rate just went offline, we simply just mined more Bitcoin. Like we didn't have to do anything besides watch the difficulty go down, and a pretty significant adjustment. But aside from that, there has been a lot of interest in hosting. And I think it's not so much miners in China trying to relocate the hardware that they have there out into North America, to Canada, the United States. It's everyone looking at these future orders now. Everyone, I shouldn't say everyone, but so many miners have been upgrading to S19s through Bitmain, through purchase orders that deliver through 2021, through 2022. And what everyone is, I think, is mainly scrambling to do is decide where are they're going to point those miners. So we have seen a lot of hosting interest from that. There hasn't been anything material that have come from discussions around that, but we are in the hosting business, so we are continuing to talk to people, look at the market, and look for the right fit.
Mm-hmm. Yeah, that makes a lot of sense. Jason, you make a really good point that I've talked to some friends that were Chinese miners, and it's really sad. They built like infrastructure, they built so much in China, and then all of a sudden had to figure out like what their new business model was. And I would say that there's also significant differences between like North American mining and Chinese mining. Like even, North America, I feel like we build things and there's no intention of moving them, whereas China was always migratory, right? So I think that's like a new trend that is very different for us. And then also, like, especially for the three of you, public mining companies have to have a plan, right, with what they're doing with their machines and their infrastructure. So it probably doesn't feel like the best fit sometimes when someone's like, hey, I have a ridiculous amount of machines that I need like right now. That plus all of the, COVID backlog for building out infrastructure seems like it's like the perfect storm, and not in a perfect way, in like a very bad way for people trying to migrate. So yeah, it's been a interesting thing. It feels like we're all hearing the same trends and talking to a lot of the same people, so it makes sense. So going back to the block stat, assuming that block stat is true, right, where 60% of the Bitcoin mined was done by the 5 North American mining companies, that's probably the highest percentage of Bitcoin that's ever been mined in North America since like the earliest days of Bitcoin mining. Are we concerned at all that that's too much hash rate, and too much hash rate could end up in North America and become a centralization risk?
I don't think so. I mean, I think the United States or Canada, North America as a whole, is still catching up a ton to China. I believe the recent estimate, or I think the estimate was maybe 4 to 6 weeks ago at this point, that North America went from something like 8% to 16 or 18%. And I think that number will grow. In fact, I think that number was already growing, whether or not China had banned mining, because miners in North America have been ordering so much hash rate, and so much is going to be deployed over the next 48 plus months. And this just, I think, kind of accelerated that. So I think the United States has a lot of catching up to do. And I don't think it can go so much as reaching that 50% plus that China was once in. I think there were very specific reasons that China was in that position. I think one of the key ones is not just the low power costs, but also the proximity to where hardware is produced. And at least at this point, we don't have that in North America. Maybe one day we will, and we'll be revisiting this conversation. It'll be, hey, Jason said this would never happen, and now we have 80% of mining in North America. But I think overall, this is an exercise in Bitcoin mining infrastructure smoothing out its distribution all over the globe. So I don't expect it to get that out of hand. And
Yeah,
I'll just add one thing. I think from what we've seen in China will cause the mining market to look at that and not want to replicate it. I think the more mining you have in one location, the more risky it may become to mine in that specific location. So I would expect if we saw North America, let's say 40% of all Bitcoin mining, I think new entrants might look at that and be like, maybe we're kind of overcrowding. I don't feel safe about deploying capital here anymore. Just a thought.
Well, and I think too, like North America is a continent. Like the US and Canada are separate countries, separate jurisdictions, and I think that's relevant. And then I also think because there are so many publicly traded miners in our space, inherently it would never behoove us to work together nefariously. I mean, it completely goes against our fiduciary obligations, responsibilities, disclosures. So I think the risk here is much, much lower, and I don't ever see the hash rate getting there in the first place. And even if it did, the risk profile is not the same.
I'd say that mining is really just a play on the electricity, and so as such, you should expect that it should follow a pro rata breakdown according to how the electricity is produced around the world. So with US being the #2 electricity producer behind China and Canada being #3, those should be the top two markets, but they shouldn't have 50%. You know, they should have a relative ownership based on how much electricity they're producing relative to the world. And I think we'll see that scaling across, you know, the countries. As people look for opportunities, they're going to start with the people that produce, or the jurisdictions that produce the most power, and they're just going to keep moving down the chain until all the different opportunities have been identified and pursued. So I think that's how the breakdown is eventually going to work out, you know, over the next 20, 30 years. It's just going to look exactly like the electricity makeup around the world. And that being said, you know, even the North American miners, I mean, we're integrating everything together. And so we're going to be kind of a stalwart against further crackdown in the United States, because now people are going to be invested in it. Now there's going to be exposure tied to it to investment banks and funds and retirement accounts and all these other things. It's going to become more and more difficult to unwind this as it gets further and further integrated. And even us as a company, we're a Canadian company, but you know, now we've uplisted to the NASDAQ. So now we're in 2 different, you know, global exchanges, and we're expanding internationally as well. So we're not just going to keep our footprint only in Canada. You know, we're going to be a North American company, but we're going to have operations around the globe.
And that is an interesting question, because I think, well, it's an interesting answer because we talk about that low cost of electricity, right? And that is like one of the main drivers for mining, if not the most important driver. We think about all of the Chinese hash rate coming offline, where China had the lowest cost of electricity. We always, you know, I think the holy grail is, what is that median cost of electricity that miners need to be at or below in order to be the most competitive? Do we think that that cost curve number has changed since China shut off? Like, has it increased? Has it decreased?
It's definitely gone up. Because of the mining profitability, you can mine on much higher cost electricity than you would before. And even if you look at how the hosting agreements are being done now, I mean, if you work out a profit split, you know, 25% profit split on a new S19J, and you work it back into a per kilowatt hour cost, it goes over 10 cents per kilowatt hour pretty quickly, you know, in these positive economic times. And the bigger that Bitcoin pulls and the more profitable it becomes, the more and more you're effectively paying on a per kilowatt hour basis. And then when you have all these people who are putting miners into containers for, you know, storage and waiting for an opportunity, the more Bitcoin goes up, the more they're going to be willing to pay in order to monetize that equipment and get their value back, right? So this is actually kind of the perfect environment for the mayor of Miami to finally be right. And maybe as Bitcoin hits 100K, people are going to pay 10 cents for nuclear power just to be able to deploy.
Fair enough. Anyone else have any comments on the median cost curve and if we think it has adjusted?
No, I'm totally with Ben on this one.
Yeah, I think, yeah, it certainly has gone up, like Ben said, but I do think people are maybe starting to see the United States and Canada have more competitive energy costs than what they probably previously realized. A common thing I get when I talk to people, not so much anymore, but let's say, you know, before the 12 months ago, was how can you possibly be mining? There's no way you guys can compete with energy costs here in North America. And it's like, well, actually we can. There are some like really good energy opportunities around here. So cost curves has definitely shifted more to the right, but I think people are seeing that we can hold our own in North America more than they realized.
And Jason, do you think that's because people look at like their electricity bill and they're like, no way?
if they live in California, they certainly think that. It was just funny. I just looked at my bill the other day, electricity program, and we're used to looking at these prices and mining all the time. All of a sudden, I'm looking at 20-30 cents a kilowatt hour, and I'm like, I didn't even know power could be sold this high. But yeah, I think there's some of that. And I think it's also just people used to kind of the clips they hear in the media all the time. Mining in China, energy's, next to free, and people just assume you just can't possibly do that in the United States.
That makes
the energy here in North America is pretty competitive at an industrial scale in the right, jurisdictions and locations. The things that are challenging here, especially for the Chinese, it's not the energy prices. I think it's the regulatory environment, it's the business culture, and it's the labor. The labor is the really big challenge here. People work 5 days a week, they work 8 hours a day, they do not live on site. And they get paid significantly more and take a lot more time off. So, it's a very, very different environment. They're used to driving up to an energy plant, having a couple of drinks, shaking hands, and starting work the next day, being set up in 8 to 10 weeks and having people live on site 7 days a week. Being responsive to any sort of question, any sort of demand, any sort of text message. You do not get that here in the United States. We can get very effective energy costs, and in some ways, in some areas, cheaper than in China. But the labor will never be cheaper, and the regulatory burden will also never be lower.
That makes a lot of sense. So we talked about your procurement strategies for like the Chinese miners' exodus, right? And being able to take advantage of that. But procurement is like a massive deal, I think, for mining, both on the electricity side, like we were just talking about, and then also on the hardware side. So how do you guys juggle both of those procurement factors and then think about like the capital and what you need? Like how do you sleep at night? Basically, is the question with those things that you have to think about.
Well, I think there's definitely a lot of moving pieces. I mean, there's two major moving pieces to that. We have our cost of capital at any given time, and then what the cost of hash rate is at that kind of time. So I think the way that we try to look at it is the hardware market is very dynamic. It's changing with Bitcoin market conditions frequently. So that type of pricing is always being updated. So we're kind of keeping tabs on that and doing our own calculations on what pricing makes sense. And then in parallel, I think as a miner, you have to basically maintain a pretty good cushion in the bank all the time, so you're prepared to act on those opportunities. It's not like the order comes up and it's like, okay, great, yeah, we'll iron this out in 60 days, let's get the capital together. It is, you are signing that week if you want that order. So it's pretty important to, I think, maintain a pretty conservative cash position and be positioned to jump on these opportunities when they come forward. So you have to kind of look at when your cost of capital is good, you're raising money and filling those coffers, and then simultaneously evaluating the hardware market and jumping on there. But how do you sleep at night? Definitely never easy, because the competition is fierce. You have a bunch of publicly traded companies that are every week someone has a new order in, everyone is buying, and Bitcoin mining is very often an arms race. You have to continue to scale, or you are going to, eventually become marginalized. So it is that exercise I'm talking about on maintaining a strong capital position and looking at the hardware market, that is ongoing. There's no rest there.
Mm-hmm. That leads me to another question that I have. Mining is dependent on hash rate in Bitcoin and also having the capital to scale. But then that like really is, well, what is your best treasury management strategy for your your company, right? Like you're literally minting new Bitcoin, and you're minting it at like a significant discount, right? You can look at all of your statements and see how much you mined a Bitcoin for, and it's obviously lower right now than it is that you could buy them. So what is your treasury management strategy? And what do you think is the best way to like be the most effective Bitcoin miner?
So I think there's fluidity to that answer as well, like all things in this world. So we're one of the miners that has been hodling since the beginning. So we've always been selling a portion to pay our operating expenses and then keeping the rest on the balance sheet. But then this year, I think ourselves for sure, and many of us in this space have not been a seller since early this year, and are really focused on growing that Bitcoin on balance sheet. And I think one of the big differences, when I first took over and was having conversations with investors, we had there was a lot of conversation on why did we hold Bitcoin on balance sheet? Why weren't we selling to reinvest? And now that conversation has very much shifted to investors wanting that hodling strategy, wanting us to continue to grow the stack of Bitcoin. So that's been a really interesting shift in a relatively short period of time. And then I would just add to one of the other things that's now keeping a lot of us up at night, I think, is the shift in supply chain challenges on the power infrastructure side. So anybody looking to build out, transformers used to have a 14 to 16 week lead time, and now we're getting quotes of 50 to 55 week lead time. So you just never know where the pressure point's going to be in this business. And so certainly, I don't think any of us sleep particularly well, and you're always watching every component of the business that requires attention and scale.
Mm-hmm. Love the new backgrounds, guys. Was not expecting this. So.
Yeah, well, Jamie was putting me to shame there with my hotel background. So
Yeah,
it's a good flex, guys. It's a good flex.
Yeah. Well, to answer your first question, Amanda, I sleep on a bed of dead S9s, so I sleep pretty well. It's a very firm mattress. But on the capital side of things, I think this is the reason why every Bitcoin mining company, at least at scale, is probably going to become a publicly traded miner, is because of the access to capital and because of the lower cost of capital. And so all of us really have a unique advantage over other miners because we're able to tap into significantly larger amounts of capital at lower cost than most other firms would. It's just that nature of going through the process, going through all those regulatory hurdles, having auditors check our books, being publicly, having public financials and everything else. And that enables us to tap into really effective pools of capital. And I think having those lined up before these opportunities arise is very, very important. So that you're able to draw down and be flexible. That being said, we maintain, our own internal metrics for how we invest our capital and what the return on that investment should be. And we've got a different, timeline for return on investment for infrastructure than we do for miners, right? And we're tracking the miner price in real time with our own metrics, with trying to predict what the cost per terahash should be for each different model that's out there, so we can make our most informed decisions. And then, when we're looking at the mining hardware, if we're not making an ROI in under 12 months, it's a no-go for us. And on the infrastructure side, we have a little bit of a longer return on investment, but that's closer to 18 months. And if we're not making a return on investment on our infrastructure in about 18 months, then it's kind of a no-go for us. And so that's where we're basing our numbers off of. And, that makes us very, very efficient in the long term. And no other industry is really targeting ROIs of under a year and 18 months, for their new investments. This is a brand new world that people are going to get used to in finance. And once they understand what the publicly traded miners are capable of doing on those returns, I think our cost of capital is going to get lower still.
Has the capital market changed for miners over the past few years?
Yeah, absolutely. Back in 2018, I believe I was the first guy offering 100% financing on mining equipment in Alberta, and nobody qualified. So we had it. We had a group that was financing, but nobody who applied qualified. The situation's completely changed now. You've got multiple financiers in multiple models, multiple interest rate. You've got more traditional groups who are saying, hey, we've got cheap access to capital, or our internal cost of capital is maybe low single digits. How do we safely deploy this with a good return? there are very few industries right now that you can look to in this economy and say, hey, this industry is doing well. This industry doesn't have problems. This industry has predictable revenues over the next 3-5 years. You can't say that for retail. You can't say that for, a lot of things right now. Bitcoin has no customers. We just make a cash flow, and it's very, very mathematical and predictable. And I think as these finance guys start to understand that more and more, there's going to be a larger and larger bevy of options for us at lower and lower costs.
Yeah, I think that there's definitely growing interest in Bitcoin mining from the capital markets side. I think for two reasons. One, there are some investors that simply cannot custody Bitcoin. So they want a traditional equity like a stock they can get exposure to. And Bitcoin mining if you're a Bitcoin miner, that's a great tool. I mean, if that's truly all you're doing, then you are obviously, your financial results are very correlated to the price of Bitcoin. And I also think that to those who are getting more, diving deeper into the space, the message that Bitcoin is a tool to accumulate, Bitcoin mining is a tool to accumulate Bitcoin at a discount to market is permeating to people as well. Okay, wait, if I think Bitcoin has gone up so much recently, but I still want exposure, well then Bitcoin mining is still an interesting tool because that is dollar cost averaging it over time, and I'm not so much committing to the price of Bitcoin right now, but results over the lifetime of the equipment that miner has. And I think one of the metrics that shows us the increased capital market interest is the really, I think, rapidly growing amount of analyst coverage on Bitcoin mining. In 2020, I think there was one analyst, there was one bank, I shouldn't say one bank, one analyst covering Bitcoin mining. And now I think we're close to 5, and that number is growing pretty rapidly. And the reason that that's growing is there's interest, those banks are seeing interest around Bitcoin mining. So I think obviously all of our stocks have performed very well this year, not just in price, but the increase in trading volume has increased dramatically as well. There is certainly a growing interest in the capital markets for Bitcoin mining.
Yeah, and I think the other thing that we've seen is like the opportunity that we've taken advantage of with you, Amanda, at Galaxy, as well as with Genesis, to actually start to earn yield from the Bitcoin on our balance sheet. So that's something that that investors seem to really like, and they're asking for more of, which is really putting the Bitcoin to work while we continue to hold it, so that they can take advantage of the appreciation over time, but also get some cash flow in the interim.
So one thing that we toss around a lot at Galaxy is the concept of like hedging strategies, right? Do you think that investors at some point will require and expect hedging strategies from the Bitcoin that you are going to produce in the future?
Yeah, we have a lot of conversations with investors about it. And so far the majority of the sentiment that we hear is they don't want us to hedge. They want to manage hedging on their own, because from us, they're looking for alpha, and they that's why they're interested in our stocks in their portfolio. So I don't think it's there yet, but it could change over time. I mean, certainly that's a strategy that's well employed in the gold industry, but so far we don't see the demand.
Yeah, I see the same thing as Jamie. It's maybe you get questions out of curiosity, like, hey, is this something you guys do? But not questions in the context of, this is something as investors that we think you should be doing. I think Bitcoin miners are like we just touched on, are a vehicle for investors to get exposure to the wonderful volatility that comes with Bitcoin, and they want the full upside of that.
Yep.
And they have to be comfortable stomaching the downside, because you can't have one.
Yeah, but when you're mining Bitcoin at a price that is so low, is the downside really that bad?
Yeah, I think that's how we hedge ourselves, is by position ourselves as low cost and efficient operators. Because if we can produce Bitcoin for a low enough cost, like our bottom side, our downside is hedged, right? And then there's no reason to hedge against upside, or this is unlimited upside. That's what everybody wants. I think if you do want to hedge, there are models out there. I mean, if you go through that revenue share model, that is kind of hedging, because your cost of production and cost of operating is going to scale with Bitcoin going up and down. And so as Bitcoin rips to 100K, you know, you're going to be paying well over 10 cents per kilowatt hour. Could be 15, 20 cents a kilowatt hour. But if Bitcoin pulled back to 20 or 15, your cost would go down as well. So there are different ways that you can position yourself. And I think the risk or the profit sharing model from hosting is that way to hedge as a miner. You can also hedge by saying, and this is traditionally the way that the Chinese have operated, is let's have enough hosting in our business to cover our operating expense in a bear market, so that we can continue to stack our Bitcoin and hold on to our Bitcoin and not be worried about how we're going to make payments, right? So I think there are ways that you can position yourself as an operator in order to make sure that you're low cost enough and can handle any environment. And then you should just be trying to gain as much upside as possible. And that's what, you know, we do. We have a fixed operating cost. It doesn't matter if it's worth, you know, 40 cents per terahash or 20 cents per terahash. Our cost to produce that terahash and operate that terahash is fixed.
That all makes a lot of sense. Yeah, I look forward to giving Chris, our president, how much it costs us to mine a Bitcoin every quarter. Just gives me like pure joy to like hear that number. So I feel like you guys all probably feel the exact same way. So like the hedging strategies seem like so far off when like for us, like we mine Bitcoin below 10K, right? So that's just a beautiful number that you can just kind of get around some of those hedging questions because your hedge is the cost of Bitcoin right now, which we all started off today saying, what a beautiful day of Bitcoin's price, right?
Yeah.
So.
Yeah, I think Ben makes a great point about needing to have a strong balance sheet. So you are never in a position, you know, if the market takes a strong turn for the worse, that you might have to start selling Bitcoin at lower prices. And it's funny, it's almost ironic. If you look at all, let's say, publicly traded miners over the past 3 years, they would be selling Bitcoin, you know, to cover operating expenses at certain points in like 2019, 2020, in the middle of really a bear market. And here in 2021, when the price suddenly takes off huge, that's normally when you would expect people to sell it, but the opposite, that now no one sells. Like there's been, I think, next to no selling of Bitcoin this year. And I think it's just by virtue of people seeing the momentum and, you know, appreciating the upside of Bitcoin, and miners wanting to appreciate that as well. But certainly an important part of I think a capital management strategy is looking at what's occurred now, learning from the past, and being well positioned in the future to not sell Bitcoin as much as you can help it.
What is the easiest mistake to make as a mining company? Is it selling your Bitcoin?
That's one. I think the next is purchasing hardware at simply just buying too expensive of hardware. It's really easy, I think, for new entrants in mining to look at the economics at that exact point in time and model out that, you know, this is going to sustain, or, you know, it's going to get even better. So if you were modeling out what your return is going to be on July 3rd of this year, yeah, you know, when difficulty plummets like that's not going to sustain. That margin has tightened a bit already, and, you know, probably will continue to tighten over time. So I think simply put, the mistake is buying hardware too expensive. I think really accurately modeling this is a bit more complex than maybe a lot of people appreciate. You have to be looking at a whole array of outcomes and using those to come up with what your break-even cost of hash rate is, or positive expected value cost of hash rate.
I think the hardest part about being a miner, to Jason's point, is practicing that patience. Like it's so difficult in some of the portions of the cycle to be patient and wait for the right moment and not kind of fall to that pressure when things are ripping and other people are making orders. Like we get a ton of pressure, and patience is a virtue that I don't think any of us were actually born with. So we generally just try to practice it.
FOMO is real, Jamie.
It's real. It's real. It hurts.
That short-term volatility is really difficult, right? And I think dealing with that is the hardest part, probably. Long-term, I think mathematically it's really predictable where we're going, but it's what's going to happen today. Why is it going up today? Why about tomorrow? What's going to happen tomorrow? You know, and when you're evaluating some of these purchase contracts, you know, 1 or 2 days can make a substantial and meaningful difference. And so, you know, that's probably the greatest challenge, because you need to execute on these contracts within, you know, hours or days, and within hours or days, the entire economics can change dramatically. Beyond that, I would say the biggest mistake that I see people doing is purchasing the wrong hardware. People make the mistake thinking that all hardware is equal across, you know, models and manufacturers and everything else. And if you're modeling that, hey, I'm purchasing this miner and it's going to have 100% uptime, and really, you know, it's got a 20% failure rate, you should expect you're going to have 20% less revenue, you know, than you were originally counting on. And you're also going to have increased overhead and repair costs and all these other things to try and recover that revenue. So I've seen that happen a number of times with people getting in with, you know, Gagnon or Silicon, and they're buying this hardware, they're expecting 100% uptime, and they're not getting anywhere close to that. So that's a big challenge as well.
Yeah, it's interesting. It's almost like you have to learn by do in order to be able to scale. But like what Bitcoin mining requires is a lot of upfront capital, right? So if you get it wrong from the get-go, you're kind of putting yourself in a bad position compared to others. I remember when I was trying to buy hardware, this was in 2017, so the market was very different then, at Fidelity, and explaining to like Fidelity procurement that like they needed to pay it like immediately, because they were like, we're Fidelity, what are you talking about? Like, we don't pay any invoice immediately, right? So it's I think, you know, it's come a long way from, I think, that point. Like we now have, you know, weeks, and there's actual like, you know, a person that you can talk to on the other side, and you don't have to pay in just Bitcoin, you can pay in dollars, right? And even just not 100% upfront anymore. So I think the hardware market has come a long way, but when you levy it against traditional hardware markets, it feels like a whole new world. And Jamie, you and I had that conversation like a long time ago, right? Like that was very—
The first time I saw a mining hardware contract, I almost passed out. I couldn't believe it compared to traditional kind of tech procurement. It was a big adjustment for me and another round of sleepless nights trying to get comfortable with, you know, that amount of capital with contracts that do not resemble traditional tech procurement contracts at all.
Yeah, so I combine that Jamie's point with, you know, what Ben said about needing to move quickly, and with that in mind, you need, whether you're a public company and it's your board, or you're a private company and you have some other type of leadership structure, you need a leadership structure that is fully subscribed to your mission, understands the name of the game, and is going to support that. You don't typically go to your board and say, hey, $100 million purchase agreement, we got to sign today, let's go. Like a typical board would expect, you know, lots of discussions, lots of models and presentations, but you really need a company where the full set of leadership is subscribed to that mission and understands that this is the stuff that's going to come, this is what it's going to look like, and it's go or no go when it comes up.
Yep, totally agree.
Really good point, Jason.
Yeah. So generally, let's talk a little bit about being a public mining company and the differences that presents versus being a private mining company. And Jason, you just hit on one, right? Like approval of purchasing and like, you know, expansion, that's definitely a massive one, because there's parameters set, right, that you have to abide by. So I'd say that's definitely one of them. But do you guys see any others? Like, you know, there's audits, there's disclosures, there's financial reporting, right? All of those things add more burden onto you being a public mining company. So, you know, what do you see as the main differences?
Well, we released our Q2 financials last week, and you probably saw our legal bills because we also dual listed on the NASDAQ in Q2. So I think compared to private companies, just the amount that we work with external counsel, external auditors, there's a lot of additional, obviously, burden of disclosure, but also costs involved in making sure you're doing it the right way with the right support.
Yeah, and you know, that type of compliance takes management bandwidth as well. So not only are you paying the management fees, professional fees to lawyers or auditors or whatever type of accounting services you might need, but then you're taking management bandwidth away working on these things. So then you need more human resources supporting, you know, the overall company mission as well. So it definitely adds a level of workload and complexity that private miners don't have to deal with. You know, the trade-off is that we have a very efficient access to capital, which is certainly worth all that work. No doubt about it. But there's lots of other stuff that we have to be, as publicly traded miners, we have to be on top of all the time. There's financial reporting, internal control procedures on everything we do. And it's not just the bookkeeping part of things, it is the actual mining things as well. How you're inventorying miners, how you're double checking pool hash rate, how you are handling evaluating any type of testing or anything new you want to do. There's a whole set of procedures that have to be followed through that. So you don't, it really takes some experience to get close to the same type of fast moving flexibility that a private company might have. Private company might take, they might have a whole warehouse of, let's say, S19s, and they decide, okay, we're overclocking all of these tomorrow, let's go. It's a publicly traded company. It's not as simple as that. You can still get it done necessarily, but there's some boxes to check along the way. I think all told, it makes the organization run better. I think everyone involved feels more confident and secure about what's going on. Obviously, these procedures exist. Auditors want them for a reason, because they want you to minimize ever having type of issues. So I think all told, it's worth it. But it is additional work, and as Jamie noted, much additional expense that other miners don't have to deal with.
Like as a private miner and a guy who operated privately, the business is incredibly simple. Buy equipment, run equipment, get the coins. You really don't have to do anything else. And as a publicly traded miner, we're doing a lot of stuff that doesn't actually help our core business in terms of operating or growing our hash rate, right? So the regulatory compliance and providing that transparency and trust layer to investors takes a lot of time, effort, and resources, as Jamie and Jason have pointed out, and it does not help us grow our hash rate. It may help us grow our share price or reduce our cost of capital by doing these things, but they're not helping us actually operate our core business. And I think that's a big challenge as a publicly traded miner that I think we've all learned, jumping into this space. That being said, there are significant advantages to doing this. And we are gaining, a lot of notoriety just because of the fact that we do keep everything public. We do become, leaders in the space. We become experts in the space that people turn to for what's going on in the industry and everything else. And, I think as we look at a more strong North American mining environment and regulators continue to, look for ways to regulate the industry, we're going to be, the people that they turn to, the publicly traded miners who are, the faces of these companies who represent, hundreds of thousands or millions of investors, cumulatively. I think we're going to be the people that they turn to. So it's good to build up, these reputations now so that we can leverage this for further growth, not just for our own companies, but for the industry in general.
Yeah, and I think that goes back to a point that Jason brought up too. There is this workload for the management team. And there's this massive education piece, right? That like you don't really get around. Like we're a publicly traded company. I have to have conversations with auditors, and it's like basic things that seem so simple to us, right? But that is like very far-fetched from someone who doesn't know mining from a day-to-day basis. So I think that we are kind of public mining companies are laying the foundation for people to understand that basic level that then will, I think, like launch mining and continue to be like a strong requirement, not a strong have a strong foundation in the US is what I'm trying to say. Sorry. So I think that all of that work that you guys are doing, that doesn't, Ben, like to your point, like increase your hash rate, it actually does eventually, like it's kind of like good, right? It's net good for like Bitcoin. And I think that we all at some point are somewhat responsible for Bitcoin and representing it the right way. So I think,
I think it's good for the industry as a whole. And I'd much rather be the person testifying in front of Congress than some of the other people that I see testifying in front of Congress. So, hopefully as our companies continue to grow and represent a larger amount of investors, we'll be there. But we need that education to integrate into the rest of society. And we need that education to not only bring retail investors in, but institutional investors in, because institutional investors have been on the edge, since 2017, 2018, looking at this saying, what is this? Do I want this? Can I get exposure? Can I get this past, whatever levels of approval that they have in their organization. And, you know, unless they have groups and executives like us, it's probably not going to happen. So I think we have a responsibility to help grow the industry and educate everybody that way.
I think so too. And I think this is something that we've all talked about at length, right? Mining is a very misunderstood industry. And the major narrative that I think has been partially why people have been scared to jump in is this narrative around the environment, right? Like ESG has been this massive topic in our industry lately, and it really has been the entire time, right? Like you can pull up articles from any point where like Bitcoin's boiling the ocean, Bitcoin's going to like use all the energy as like a small country, et cetera. And so I think one thing that we all have done is become members of the Bitcoin Mining Council. So I'd love to hear about why each of you decided to join that, and has that helped you kind of battle the mainstream narrative that we've all faced?
So first of all, I want to thank Ben for volunteering on behalf of the industry to testify in front of Congress. Yes. I think that was a selfless act, and I personally really appreciate it. So thank you, Ben. And
for president.
Exactly. You might have to change his citizenship.
Yes.
As for the Bitcoin Mining Council, I think it's been a huge benefit. I think we've all spoken about this recently, because it was the first time that we came together as a collective and had a data set we could point to, and we could point mainstream media to, that was viewed as more objective and representative of the industry as a whole versus any one company. So I think it's been hugely beneficial.
I think having an extra layer of transparency is good for us. We want our investors to be able to see what we're doing and see how we're making a positive impact on things. I would say when it comes to this ESG narrative, though, that, you know, the media is based on a fear-based mentality. It's not based around data. It's not based around results. It's not based around any sort of math. And so, you know, we've been 100% green since our inception, and we get, you know, questions every single day, especially at the peak of ESG, you know, hysteria, that, you know, hey, please tell us why Bitcoin is not green. And we say, well, actually, this is why Bitcoin is green, and you're contacting us, and we're 100% green, and we've done this for 4 years. And they say, that's not the article we're trying to write. And so, you know, there's a really strong bias there, and the people who are uninformed and have a bias are very organized. And so I think it's good for the people who, you know, are informed and do have a meaningful position in this industry to also organize, because you can't fight organization with unorganization. You have to meet it with equal strength. And so I think that's what the Bitcoin Mining Council is there for, is to provide that organizational layer and transparency so that we can counteract this hysteria.
Yeah, exactly. And I think it was something that was needed, because for years, we've all been just pointing to the same Cambridge Analytical Alternative Finance study. And that's not something that's being updated on a super regular basis. And I think all of us were feeling the pressure of getting these type of questions. And we needed like Ben said, an organization structure that was putting this data together and updating it on a fairly regular basis. So it's been great to have this to point to. I definitely don't feel like I get the same amount of questions around Bitcoin mining and ESG related issues anymore. So, I mean, still comes up here and there, but not to the same degree of when, as Ben, I think, put it as peak hype or hysteria, I think in around the May of this year. So the message is getting out there. I think the message is penetrating, and that's great for all of us.
Yeah, I agree. I think that in the past, you would kind of have to stumble around that answer, right? And now, like, I think there's a lot of value in saying, look, there's, you know, a loosely based group that shares their energy transparency, and here's the number, and it's updated quarterly, and here's where we're at right now. And I think that people are just like, okay, this is something that is defendable, right? And I can get behind. So I think that it's been a really good thing, but obviously I think we all might be biased. So there is, you know, another side where we received flack from some Bitcoiners that think that it's really like a slippery slope, right? Miners have like a group of miners organizing together. How do you guys think about that and address that? Because at the end of the day, like, we're all Bitcoiners and want the best for Bitcoin, right? So I think, that's been something that we've all grappled with. So what is your answer to the other side?
I think there will be a lot of areas of Bitcoin becoming institutionalized that a lot of old, hardcore Bitcoiners are not going to be comfortable with and are not going to like. But this is an inevitable stage of Bitcoin's adoption. And in order for this to go to the place where we all want it to go, it will need to go through these steps. And so this is just a step like anything else. As this industry is becoming institutionalized, there will be channels like this, there will be forums like this, there will be organizations, there will be conferences, there will be testifying before Congress. Like, all of these are steps that happen with every other industry, and Bitcoin is not going to be an exception to this. If Bitcoin was an exception to this, it would kind of, undermine Bitcoin, because they'd say, why is Bitcoin the only industry in the world that, none of this applies, and that we're not going to do any of this stuff? And I understand with Bitcoin, we're a very much anti, and inverse of everything else. So they say if they do it in that industry, we can't do it in this one. And I don't think that's true. These are natural steps that every industry has to take in order to get integrated with the financial systems, in order to absorb as much, of the fiat printers as possible, and in order to drive Bitcoin to the highest price as possible.
Yeah, Ben makes a great point that this is how the industry just grows. This is the result of this type of industry growing up and going mainstream. And even though this is occurring, this doesn't take away from the properties that make Bitcoin valuable. Bitcoin is still decentralized. Even if mining gets institutionalized, you can wipe out all those companies. Bitcoin is still going to continue on.
Yeah, I like you guys, but I want all the Bitcoin for myself, right?
Exactly.
Yeah, exactly. So I think overall this council has I think had a positive impact, and I'm sure there will be other things that come in the future that'll make hardcore Bitcoiners uncomfortable. I mean, there are some hardcore Bitcoiners that are just uncomfortable with publicly traded miners existing, period, especially at scale. And I get where they're coming from, but I think ultimately it's helping drive adoption of Bitcoin and improving the industry as a whole, and not a net negative.
Mm-hmm. That's awesome, guys. I can't even believe that our hour is over. We didn't even get to all of our questions, but this was so much fun. Luckily, tomorrow we have another session on Twitter Spaces where everyone in the audience can also raise their hand and ask questions, and I maybe can get through some of the other questions that we had on our list. So looking forward to seeing you guys all there tomorrow. And thank you so much for joining. Really appreciate it. And maybe, next time I'll have a background ready to go that maybe is like a money printer or something that would be equally as fun as your background. So thank you guys so much.
Thanks, Amanda.
Thank you for having me.
Yeah, so fun.
Bye, everyone.